As we open the week, global markets are trading with a more cautious tone driven by persistent geopolitical tensions in the Middle East, particularly ongoing risks around the Strait of Hormuz and uncertain ceasefire negotiations, which have kept oil prices elevated, heightened stagflation concerns across energy importing economies, and supported safe haven demand for the US dollar. This backdrop continues to reinforce policy divergence with resilient US data, including a strong March labor market report anchoring expectations for higher for longer Fed rates, while the ECB's latest projections showed upward revisions to 2026 inflation, but downgraded growth, and both the BOJ and RBA signaling only gradual normalization amid imported cost pressures. In FX, the dollar is broadly firmer, weighing on the euro, yen, and Australian dollar, with the latter also sensitive to shifts in global sentiment and China related demand. U.S. equity indices are mixed but capped, with the S&P 500 and Nasdaq holding near recent highs on soft landing optimism, while risk aversion limits further upside. In commodities, crude remains supported on supply risk concerns, and gold is finding some safe haven demand into dips. Looking ahead, key event risk in Europe centers on ECB speaker commentary for any shift in policy tone. In North America, focus turns to U.S. existing home sales and any Fed speak, which will be closely watched for further guidance on growth outlook and policy path. But overall, markets are likely to remain primarily driven by geopolitical developments and energy price dynamics, with headlines around the Strait of Hormuz and ceasefire negotiations continuing to act as the dominant catalyst for price action. That's all for now.